Hello again, Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Today we wanted to talk about a few things that are of interest from morning research. Again, thanks for all the friends and family and clients, most of all, that have just given us some tremendous feedback. And thank you for watching as we're continuing. Our goal and our mission is to maintain communication in this time of all of us. We need to be connected, and you know, we're here managing portfolios and staying on top of all your retirement needs, and we're here for you if you need us. But in the meantime, we're making certain that we're getting things done and working our way through this market in a proactive manner, a very constructive, thoughtful, but prudent and proactive manner. So in the meantime, I also want to provide some communications based upon what we're seeing, thinking, and most of all, morning research, as headlines change constantly. So let's get right into it. First and foremost, the Federal Reserve announced this morning another $2.3 trillion. That's with a T, and it's a lot of zeros. In terms of stimulus and aid and backstop for small businesses, just to ultimately, and municipalities and hospitals, and everyone out there. So again, the government and the Federal Reserve specifically has been extremely committed. If I were to making certain that we're going to get through this, and to really provide that stopgap, I keep saying, in the economy, to bridge the next 2-3 months as we sort of reopen America again. And we don't know what that looks like. We don't know when that's going to happen. Leave that up to all of the wonderful medical professionals to give us guidance on that, and thoughts and prayers for all of them working overtime to keep us healthy and safe. As I've made reference to this several times, I believe the Federal Reserve has done just an exceptional job. Time will tell, and history will be the ultimate judge and jury on this, but I think their timeliness and their swift action is just astounding. They learned their lesson from the Great Recession as well as the Great Depression. In both cases, the Fed sort of made all the wrong moves at the wrong time. In the case of the Great Depression in the 1930s, which prolonged the Depression, World War II actually ultimately got us out of the Great Depression, economically speaking. And then in the Great Recession, the Fed took too long to act, took 14 months to actually get sort of all the implementation it needed to, and the size and scope it needed to. And once they finally did, market turned around. That was the March 9th bottom of 2009. So the Federal Reserve's learned their lessons. I keep referencing this. This is extremely important because as we manage portfolios, one of the key things that I'm not looking for government to bail out any of these companies, but I am looking for the government to use all their facilities and capabilities and not hold back and not sort of wait and see mentality. And again, they did just the opposite. They were way ahead of this. So we see the fiscal and monetary policy are working together. It's giving some confidence in liquidity markets, the confidence to municipality markets, confidence to all of the markets that are out there as we work our way through this. I've referenced this once before in my podcast or video broadcast before, and that's basically just a recap of all what the Federal Reserve has done. There's now 2 pages of this. That was 28 different facilities. Again, the Federal Reserve announced this morning $2.3 trillion. And again, there's more phase 4, phase 5 down the road. So I think well ahead of what we're matched with right now, the Federal Reserve from an economic component is well ahead of the curve. I think the markets see that. Another component, something to be optimistic about, the second thing I wanted to discuss is Dr. Fauci, who is, obviously we all know him by name on the kitchen table now, but Dr. Fauci is the one that's in charge, basically giving us guidance as to, what we see. He just revised on an NBC interview yesterday. He just revised his quote unquote fatality projection model, meaning that instead of the 200,000 to 100,000 United States, he brought that down to somewhere in the ballpark of about 60,000. Again, that's one life is way too many to lose in something like this for anything, for any reason. But to take it down from 200,000 to 60,000 is just indicating that some of the medical things that are happening out there, from social distancing, staying at home, I think we're all doing our part. And again, the medical community is doing an unbelievable job. So that's welcoming news, optimistic. Let's keep doing our job and stay home. And yeah, that's good. So finally, let's talk about oil. Some positive developments. At least it's been announced that the Russians and Saudis are going to meet and potentially have a truce through OPEC as it relates to the price of oil. Again, not something that we want to see oil go up per se from a consumer standpoint, but from a pure economy standpoint, in the United States and around the world, we do need some stabilization in the oil market. So let's just keep an eye on that and see how talks progress. But I think it's something that's, if you're at home following and saying what's news and what should I pay attention to, that's something that we definitely want to keep for the next weeks and months to come on our dashboard. A topic I wanted to bring up as it relates to what we found in our morning research, very interesting this morning, was the correlation between the S&P 500, its daily performance, and the New York City emergency room visits. So essentially, take a look at this. The S&P 500 is right here in this line, and the New York City emergency room visits are here. So as they're declining, the market starts turning a corner. So that correlation is very important. Something it's positive. I mean, we want to see, more importantly, the emergency room visits decline, and that's what we're seeing. And the market's taking notice. Almost the correlation is amazing, the negative correlation. So keep an eye on that. I think that's good news for New York and New Yorkers, and thoughts and prayers are out there for them. And lastly, we've also included, look in the video notes down below, the link to First Trust Chief Economist Brian Westbury. Again, he had a replay of a conference call that we were on yesterday, and it was a quality call. So it's a good 30-minute call. So if you find yourself at home with nothing to do or just really interested in the topic and seeing what Brian has to say, take a look and click below. So thanks.